Welcome to Lockbox, a podcast providing real estate professionals with action items for success. My name is Jeffrey Broger, and I'm going to be your host. I'm the founder of two real estate marketing and tech companies, STEEZY.Digital and realnurture.io. In this podcast, you'll learn from top 1% real estate and mortgage brokers the exact secrets to their success. Welcome to Lockbox. Welcome to Lockbox. My name is Jeffrey Broger, and I am here today with Ari Shapanya. Ari, thank you so much for being with us.
Yeah, of course. It's a pleasure to be with you.
Yeah, so why don't you tell our listeners first who you are and where you're from?
Yeah, so my name is Ari. I'm a co-founder and CEO at LoanBase, a marketplace that connects real estate investors and lenders. And we launched the platform about 18 months ago, work nationwide and help real estate investors who seek for a funding between $500K to $20 million.
Okay, awesome. And before you got into the industry and got where you are today, I'd love to hear the story of your first introduction to real estate, that first exposure where you realized the power of real estate.
Yeah, so I'm actually a tech entrepreneur turned to a real estate entrepreneur turned back to a tech entrepreneur. Yes, you have to have a masochistic kind of DNA to do that. But I got to real estate in 2017 when I sold my tech company. I started to invest mostly in the Bay Area, so San Francisco, Berkeley, then a little bit of LA. And I discovered that the process around financing is really complex and convoluted, and just try to find a way to make it all simple and seamless. And I called a few brokers, I called a few banks, and at a certain point, just decided to start a solution yourself. But it's the best way to, kind of scratch your own niche approach. Yeah, so that's how we got started.
Yeah, interesting. So you sold a tech company and got into real estate as an investor, and then, being an entrepreneur, you got that itch. You're like, you saw a problem to solve and started another company, right?
Yeah. The problem with real estate is it's very beneficial for the long term, and it's obviously it's one of the best forms of long-term wealth creation per se, but it's really not as exciting as building a tech platform, and obviously it's very meticulous. And it can be very daunting. So there are states in California or cities like I'm based in San Francisco, for instance, a lot of red tape and procedures. So it can be very challenging, but definitely two different aspects. And I'm very glad to be building technology again.
Yeah, that's awesome. So why don't you tell us a little bit more about what your company does today? You mentioned it seems to be some kind of marketplace or platform for real estate brokers and mortgage loan officers to meet, but then also on your LinkedIn, it talks about, funding and, kind of more out of the box funding options. So I would love to hear it from you, what you're doing today.
So the gist of LoanBase was really, as we talked about, is to simplify the real estate transactions. It takes about 2 months to do the research of getting financing, and it takes about another 2 to 3 months to do closing. So that's 5 months out of of a certain cycle that really takes a lot of resources and effort from the developer, GP, sponsor, borrower, you name it. It doesn't matter whether you do single family, multifamily, office, retail. It is quite a complex process, and this process should be simpler. So what we do, we essentially give the borrower, the user, just an ability to answer a few questions, then narrow based on that, zero in on a few lenders that will actually fit that credit box, and then offer a specific set of lenders that are just matching. And that's where the process starts. And the whole data collection is being done in an automated way. So the borrower can have a loan package, and that can be sent to the lender. The lender then gets a very seamless experience. So it's just about simplifying the whole thing. As a borrower, I was very annoyed by, send me bank statements and send me rent roll and send me your PFS and all these things. It's like being asked the same question over and over again. So it's quite annoying. And besides that, it's time consuming. So so anyway, that's kind of the goal of the entire, when you're in the industry, you really want to focus on finding great deals and executing rather than paperwork.
Right. Absolutely. And it seems like you have the compliance all figured out there, because I own a real estate marketing agency. And I know, especially with mortgage pre-qualification leads, there's a higher level of compliance when people are sharing credit information or preferences regarding loans. So if you're to then capture a lead and then, syndicate it out to, I don't know, whoever best fits them, but the lead doesn't know that at the beginning of the journey, I'm sure you've, kind of worked all that out and you have your marketplace dialed with your privacy policies and everything, because that is a huge benefit. I mean, imagine as a borrower filling out your loan app one time, right? Not having to reinvent the wheel every single time you're, considering shopping a different lender or, comparing different companies against each other during that process. So yeah, really huge value prop. And seems like you guys have also done the legwork to be able to work it out with compliance and make this a reality, which is awesome. One question I have is regarding your entrepreneurial habits. You've successfully grown and sold a tech company, something that less than 1% of people, probably a fraction of 1% of people ever are able to do. So that's very commendable to you. Congratulations. And from that exposure of growing a tech company and selling it, and then also now having company in real estate today and real estate technology, what's the single most important action that you've taken on a daily basis that has attributed most to your success?
I would say idea is nothing, execution is everything. So if you execute in a meticulous way, it definitely increases your chance of success. I would also venture to say that category selection is very critical. Let's say, we wouldn't even let's take an example from the real estate space. Okay. So if I was investing in Arizona or in Austin pre-COVID, that will be a home run, right? Or just in the early days. But right now, maybe the market is already saturated, cap rates have adjusted and so on, have decreased and so on. So it's also about timing. It's about selecting the market and so on. And this is very similar metaphor or analogy. So essentially, you want to choose the right market first. Then you want to have a good product market fit. And then as a last layer, you want to have a great execution. If you have the best execution in the world, then obviously it doesn't going to help much if you're in a very saturated market.
Yeah, or the product doesn't fit. Yeah.
Yeah.
No, it makes sense. And I'm glad that you mentioned that ideas are nothing, execution is everything. A story from my past is when I was in college, I had an app idea. Me and my buddy co-founded this company. It's called So You. And the app idea it came to fruition when we were studying abroad in Australia, laying on the beach, couple of 3 days into that 5-month trip. And we said to ourselves, we know where we are in the world. We know what we like to do. Wouldn't it be cool if there was an app that showed you everything around you that was going on that matched your preferences?
Wow.
So that was the idea. It was 2011, by the way. So this is early to market. And we mock flowed the whole framework and did this thing. And through having questions with different people, I got in touch with a cousin of someone that was in my dorm, and he lived in Palo Alto. He was developing apps. I had him sign an NDA. And when he got on the Zoom or the Skype, whatever we were using back then, he almost chuckled at the beginning and said, "Hey, I signed the NDA because you sent it over, but we're through the idea and information age. Nowadays, everyone has an idea, right? But execution is everything." And that stuck with me. His point was that you could give me this idea and I could think it's brilliant, but I'm so deep into 15 other projects right now, I'm not going to add another one on a whim. Plus, if you're already 6 months ahead of me in execution and I'm going to go start from scratch, you're probably going to be first to market and it's probably going to be better. So just worry about execution. He's like, don't hold your idea too close to the chest and smother it, like share it, in fact, and inspire people with it. And that really did open me up to stop writing down ideas in a book and start actually talking about them and sharing them. Yeah.
That's great. Well, what happened with your friend? Did it end up being like venturing into a company?
You know what? We struggled to raise our seed round. At that time, I had no experience raising capital at all, and wasn't comfortable enough confronting my friends and family for it. So basically, it died on the vine. We did the mock flow. We needed just like $25,000 to get an alpha built out. And at that time, it wasn't as easy to build an app. There weren't like these agencies selling, here's a app framework out of a box and you can just put your stuff in it. That stuff exists today where you can essentially get an app in the app store for a couple $1,000s. And you got to do the creative, but the whole coding is done for you and it's Apple compliant. That didn't exist, right? So we would have had a team develop it, and there was this 200-page document to get into the iOS Apple store. And, it was just out of our scope. We were like, this is too much. So it did die on the vine, unfortunately, but it was just another one of those entrepreneurial ventures. I've had many of them throughout the years, and currently I have a marketing agency that is successful. So I'm happy to say that, but that was just one of my experiences, and it related to what you said about execution. It's all about execution nowadays. So I definitely appreciate that advice. I think it's really valid.
Cool.
Yeah. So with LoanBase today, you have this amazing tool that is being used to match borrowers with loan officers. You also mentioned there's a real estate broker element to it. Is that right at the beginning?
Yeah. So we essentially replaced the broker with a digital one because, let's face it, when you call a broker, when your listeners or when you are as a real estate investor, you call a broker to get financing, it's limited to the Rolodex of that broker. That broker cannot tell you, hey, this bank will do a recourse or non-recourse, interest only, or fully amortized. Their policy is 70% LTV or 65, because this can be changed and updated daily.
Right.
And therefore you want kind of centralized database that just is a more data-driven solution. So brokers can use our solution to power their clientele, but we're essentially either working with brokers directly or working with the clients directly. So either or, both can use us. We're a tool that enables a faster close, optimization. You don't want to leave money on the table when you're approaching a refinance or a bridge loan or a purchase, and you want to make sure that you close on time, because you don't want to lose your deposit in some cases.
Yes, absolutely. So in a sense, it's not a real estate broker, but you're replacing or a mortgage broker is working with your tool.
Correct.
Got it.
Yeah. You have,
when I hear broker, I just think real estate broker for whatever reason.
I mean, broker can be many things in our sphere. Mm-hmm. Can be either a real estate broker or an agent that finds you the deal. That agent would sometimes know a financing, a mortgage broker. We are, in a way, either replacing or powering the mortgage broker, especially the ones that help with investment properties or with commercial real estate. So obviously, if you're trying to get a primary residence mortgage, you don't need us. There are plenty of great solutions out there. To name a few, Rocket Mortgage, you have Better, you have, I think, there are multiple solutions for the primary residence market for the consumer. We're a solution for the commercial real estate and investment properties. That's where you're doing things like bridge loans, fix and flip,
right?
Buy, rent, and rehab and hold, and so on. So that's kind of the category.
See, and that's what interests me about your product. When you mentioned the word bridge loan, I was going to circle back around that once I clarified the whole broker thing. Bridge loans are not a common type of loan. That's something where you're a wholesaler and you want to tie down a property for a short period of time, or you're a flipper and you want to, just bridge the gap for 12 or 24 months while you complete this flip and sell it at a profit. And you want to maybe include construction costs in it and base it on after repair value rather than current state, because it's in a distressed state. those are way more creative types of loans. Typically, you got to go for hard money or different situations. So the fact that you have is it a website or is it an app? Both.
Yeah, so it's a website,
Okay.
LoanBase.com.
So you have a website that you could type in your situation or fill out a form and get all these different solutions for it, even the more creative or outside the box type of lending. That's really cool.
Exactly. Just like you shop a flight on Kayak or Google Flights, you would do the same on LoanBase. And that's kind of the experience I want to have as a real estate investor.
Yeah. Like Google for real estate financing.
Yeah. Google Flights for real estate financing.
I love that. That's awesome. Well, where do you think the industry is heading? What are your 5-10 year projections on what the real estate transaction will look like?
I believe that there are a lot of segments in commercial real estate that are obsolete. There are a lot of segments that are based on relationship, while other segments have been modernized. So you do see that in the consumer market, but less in the commercial real estate. So I think that's where we're headed. On our end, definitely more digital transactions. The financing is a more streamlined rather than the manual process. And in general, I do think that 10 years from now, 15 years from now, we'll already be in a place where the algorithms are way better in terms of assessing appraisals. So that will be maybe replaced. I know we all remember the kind of fiasco that Zillow had with the iBuy. Kind of recent events. I believe it was a few months ago, but
yeah, where they canceled their iBuyer platform.
Yeah, so obviously that was an attempt of a neural network or machine learning algo to assess and appraise in a similar manner. So apples to apples, where you're assessing, let's say, a home at Memphis and a home in Austin in the same way, but this is a very market specific, but I believe that the algorithms will get better in that time frame. So underwriting and appraisals will be way faster. Today, you have to wait 3 weeks to get an appraisal, right? And that affects financing. That affects a lot of things. That affects the purchase, and you are relying on agents, real estate agents, and so on. So I believe that in 10 years from now, definitely there will be an improved way to assess the value of the property and to close a transaction in a more efficient way. Some companies will be able to do arbitrage, but Zillow was definitely a cautionary tale, of a premature solution. So in 10 years, probably we're going to get to the point that it's ready.
I agree. I think they'll be back. I mean, when you're that funded, Zillow has essentially created a business model where they can lose $1 billion a year-ish and still operate. Because from Premier Agent alone, they make, I'm pretty sure it was $1 billion a year. So their recurring revenue alone, outside of their tech backing and funding, is the tune of $1 billion a year. So they have created a business model where they can burn cash and survive. And they can do massive tests like that and see them out for multiple years and spend hundreds of millions of dollars on it. And then say, hey, we're going to end that. And then, in another 6 months or maybe 2 years, reintroduce it with better algorithms, better information. I mean, it's not going away, but Correct. It was interesting to see them pull back. I think part of that also was due to the increase in construction costs and labor that was unforeseen due to the pandemic. And there were some outside circumstances that inflated the inaccuracy of their automated valuation methods. So those smaller mistakes that they were making up for, they no longer were able to make up for them once, construction was delayed, lumber tripled in price, X, Y, and Z happened during and after the pandemic. So yeah, I think that once markets stabilize or continue to go up, as they might for the next, several years, all indicators are showing that we're still low inventory and rates are still relatively low. So buyers should be paying premium prices at this time and moving forward. I'm curious to see how it pans out moving forward. The increase in appreciation can really insulate mistakes in real estate, right? And then when things correct is when Warren Buffett says, when the tide comes out, you see what kind of swim trunks everyone's wearing.
That's right.
So yeah. With that being said, I'm curious if you have a question that I should have asked you, or if there's anything that you'd like to elaborate on from earlier.
Perhaps trends in the finance world and then for the next 12 months in terms of like the recent spike of interest rates and where are we heading? What's the implication in terms of the volume of transactions in the market, and what does it mean to real estate investors that are approaching the refinance or want to do new deals?
Awesome. I think that's a phenomenal question, and go for it. Just imagine that I asked you that question just the way that you worded it.
Cool. So I definitely think that the next 12 months will be interesting, challenging, and full of new opportunities. Definitely the interest rates have been spiked. We see more than, I think, between 100 and 150 basis points on increase. That's on the SOFR, on the swap rates as well. So we are looking at essentially loans that were at 3.7-ish rate, 30-year fixed, gone all the way to close to 6% now. So it's definitely not a good time to refinance if you are an investor and you have the opportunity or the choice to hold on to it. But a lot of real estate investors, they are fix and flip buyers. They're in the midst of their remodeling or ground up construction, and they have to do that. So therefore, I would recommend to perhaps opt in to products that are more short term. Let's say, it can be a bridge 2 years. It can be a 5-year loan with a no prepay penalty. So once the interest rates, if they will correct, obviously depends on inflation, depends on Fed and so on, long-term policy. But I would recommend getting maybe a 5-year loan or a 7-year loan, fixed rate with no prepay. And essentially, once the rates are adjusting again, going down, then I would recommend to refi and lock in that 30-year fixed loan and best strategy. The second thing is that every challenge is that actually a hidden opportunity, because when the inflation goes up and as a result the cap rates are going up as well in some cities and some areas, it does create an environment where it's tough. It's more difficult to complete a project. So interest rates are going up. More real estate investors are kind of going to get to a certain challenge of financing, and the carrying cost is higher. And that means that fewer people will actually opt in for an investment. But that said, that if you are doing something, you do have the opportunity of actually getting more properties at a better price, perhaps getting less competitive landscape, so you can find good opportunities at decent price and move fast. And when the market will correct and when the interest rate will be lower again, then you can refinance. But if the project is solid, you can acquire it now and essentially ride that wave. So the good news is less competition. But the bad news is you will need to withhold the line with interest rates spiking.
Yes, I think that's some good advice, good insights, and really appreciate you sharing that. And I'm curious how listeners can contact you if they want to get in touch.
So I'm on Twitter and on LinkedIn, Ari Shapania. If anyone is interested to compare rates, then they can always utilize LoanBase in order to just shop like they do on Kayak and see what's out there and see when the timing is right to refinance and do a new purchase acquisition and so on. And yeah, that's pretty much it.
Awesome. Ari Shapania, everyone, from LoanBase, like the Kayak or the Google of real estate financing. Really appreciate having you on. Thank you so much.
Thank you, Jeff. It was a pleasure.
Thank you for listening. If you want to accomplish your real estate goals, then I highly suggest downloading my free Ultimate Real Estate Goal Setting Framework. The link is in the description of the show, and it will help you break down your annual income goal into the amount of phone calls, appointments, or open houses you need in order to achieve that goal. Thank you so much, and we'll see you next time.